IUL is not for everybody, okay? You have to be able to afford it. When people say like, oh, that's dumb, don't do this. Oh, that's stupid, don't do that. You really have to know your life situation and where you want to go first before you just listen to other people. And then there are all these complexities, and you have to go and learn all these different things to maximize saving for your own retirement. So again, back to the IUL. What's up, retirees and future retirees? I am back with another video. I wanted to talk about IULs and why I have one and why you might need one too. And I want to start with a story because I didn't know anything about life insurance and all that until I ran into an old friend, and he educated me on life insurance. And at the time, you know, I'm a new homeowner, and I wanted to make sure that my wife is taken care of just in case if she has this big bill, which is a mortgage. And so that's why I have a life insurance, is because I want to take care of my wife. And then throughout the years, it evolved. Now that I have a daughter and everything like that, this life insurance is now going to be a bucket that I use to help my money grow tax-free. And at the same time, it is going to be a generational wealth vehicle for my daughter, or for my wife should I pass before her, right? So this is the reason why I want to talk about life insurance. Not because, well, obviously you need it for your life, for those of you who can afford it. And that's my thinking. And that is now what I'm planning to do in terms of investment as well. So, for example, let me give you the rundown of the things that I've been putting, all the different buckets that I'm putting my money into. So, for the first thing that I need to do is I need to max out my retirement savings using my 401k, Roth 401k, but for me it's a 403b. That's what I started with. And then now I've converted the 403b into a Roth 403b so that money can grow tax-free. I used to contribute into a 403b, which is going to be taxable when I retire. Or if I die, that money goes to my heir or my wife, and that will be taxed. But a 403b, if I have that thing open for at least 5 years, which I'm approaching third year or fourth year right now, so that money is going to be going to my wife or my daughter tax-free. And then, so I'm maxing out those contributions. And then I also have a brokerage account, which I contribute money into, and then I invest in dividend stocks because I'm playing it safe. Obviously, I have Palantir, for those of you who've been watching. And that thing blew up to like 1,000%, and I still did not take any profits. I'm just going to let that thing ride, and I think it's going to be splitting and splitting and splitting, and the wealth is just going to compound over time when AI just like blows up, right? Because it's a new thing. So I'm heavily invested. Well, not heavily. I only have 50 shares, and I'm not going to be rich off of it because, again, like I said, I'm putting most of my money into safe stocks like SCHD for my dividend quarterly stocks, and then my monthly, which is JEPQ. And so I'm trying to build a vehicle through my dividend portfolio to pay for my monthly fees when I retire. So you got to start early, right? I got 10 and a half years to go or something like that. So that is the reason why I have a brokerage account. And what else do I have? I have a Roth IRA that is separate from a Roth 403b. And again, that money, anytime you hear a Roth, that's going to be tax-free income if you've had it open for 5 years. And if you don't have any employer contribution contributing into your Roth 403b or 401k. So that's something I actually learned from my friend who actually does financial planning. So I basically got free advice. Thank you. And if you need someone you can trust to be a financial advisor or financial planner, you can hit me up, and I'll send you. I'm not getting any kickback for this because I just believe that this person's she was a formal teacher as well, and I'm a teacher. So I trust her because I know that she has the right heart to do what's best in terms of fiduciary responsibilities for her clients. But anyways, I learned that from her, that you need 5 years, you need to be 59 and a half, and then you have to have no employer contribution towards your Roth 403b or Roth 401k to pull all that money with interest and everything like that tax free. So yeah, I've gotten all that settled. I think I'm gonna reach the threshold of not being able to contribute to a Roth IRA this year because your boy's making more money because there's like inflation. With inflation comes pay increase because my district is unioned, and so I'm probably not going to be able to do the direct deposit into my Roth IRA. So I'm probably going to have to do a backdoor Roth, which is using the traditional IRA and then converting that into a Roth. I haven't done that yet, so I'm going to learn about that. I'm going to try that. I'm going to get more advice so that way I don't mess up my numbers and then get taxed on these things or mess up on my contribution and then having to go back and retract some of that money. So yeah, that's where I'm at right now, which leads me to where else am I going to put the extra money that I have? It's going into my IUL, and my IUL can grow interest and then it'll be tax free if I take it out at 59.5, or if I take it out as a loan should there be an emergency. And I'm actually going to plan to do that is take out some of that IUL money that I've stacked up. It's I have about like 13,000 or whatever for my increasing death benefit IUL. Now I used to be a life insurance agent, but I stopped because I knew that wasn't for me. I love teaching so much that it's like trying to convince people to buy something that they probably should get to protect their family. And when money's involved, people are always skeptical and they think I'm just out there to like make money off of them, which I wasn't, and I didn't like being a salesman. So that's the reason why, I took a step back and be like, look, I'm going to use this information that I learned and I'm going to use that for my own self-benefit to max out my IUL, because I can't put any more money into my 403b, Roth 403b. I can't really contribute any more into my Roth IRA. And I know I can throw all that money into a brokerage account and then just, throw it into dividends. But at the same time, I want to build generational wealth besides having a house to give to my daughter, because, when I pass away and my wife passed away, what are we going to do? We're going to give our stuff to our heir, right? So this is just a vehicle. The IUL is a vehicle for me to save money for my daughter and let it grow tax-free. And then when it, whenever she ever needs to tap into it, she will have something that's tax-free. And on top of that, I can avoid minimum requirement distribution if you have like a 401k or a 403b. So that's why I stopped contributing to the 403b and I threw all that extra. I maxed out my Roth 403b instead. So that way, I only have some taxable income, and then most of my money I wanted to be tax free for my family. Now, IUL is not for everybody. Okay, you have to be able to afford it, and this can be a vehicle that, yes, there are fees, and you can flame me in the comments like, oh my God, that's so stupid. Like, why would you do that? Why don't you just throw it into your brokerage account and just throw all that money into the dividend investing, or YOLO on Palantir, right? Or YOLO on Tesla. No, I'm not going to do that, because I am hoping that I will have I will be in the lower tax bracket with less taxable income when I retire. So that's my goal. So when people say like, oh, that's dumb, don't do this. Oh, that's stupid, don't do that. You really have to know your life situation and where you want to go first before you just listen to other people and then just, oh, I'm going to throw everything into a Roth. Like, you can't. There are limitations to throwing all your money into a Roth, right? And then there are all these complexities, and you have to go and learn all these different things to maximize saving for your own retirement. So again, back to the IUL. Should I ever want to use that money because I'm, max funding my IUL, and let's say my daughter wants to go to college and we didn't save enough for her, I can take out a loan from that IUL and then use that tax-free. And I don't have to worry about, oh no, I have an income limit that I should not pass because, oh my goodness, I'm going to have to pay tax on that. I'm like, no, I don't want to do that, right? So some of you guys are going to be like, why would you take out a loan and then there's interest on top of that? Well, that interest, if I die, guess what? That interest is going to be covered by my life insurance policy. Yes, my daughter's not going to get as much, or my wife is not going to get as much as, but I mean, it's really not that bad. It's like 3% or something like that, or 3.5%. I'm okay with that. You know, if I have to take a loan to pay for my daughter's stuff, tax free, I still get to not have to deal with passing a certain tax bracket and then having to pay extra tax on the money that I loan to myself. You know, so there's a lot of different things you have to know, and it feels like I'm rambling, but hopefully I was able to set you up so you can understand the reason why I chose to try to max fund my IUL, that is an increasing death benefit. Now, I know there's like all this debate about you should get level death benefit, blah, 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 blah. Look, everybody got a different life situation. Everybody's going to plan a different way. Just because it's going to work for me doesn't mean it's going to work for you, or what works for you doesn't really mean it's going to work for me. So I'm glad that I got, schooled and learned a bunch of things, and learning how to maximize my, I wouldn't even say maximize, because I know I'm going to get hit with some fees that are going to be like, yes, I could have just thrown that money into my house. But think about it. I'm going to still be paying like property tax. That's basically me. That's a fee for me to like pay off my house early. And I'm like, my house, I'm at a 1.8%, like 1.85% for my mortgage rate. It's like nothing. I'm beating the market already. You know what I mean? That's the reason why I'm not going to sell my house. I'm going to pay it. I don't need to pay it off right away. So anyways, I'm ranting. But the point is, at the end of the day, don't let other people tell you what you need to do. What you need to do is learn how these different things, like the maxing out your contribution to your 401k or 403b, and then understanding how to contribute properly into a IRA, a traditional IRA or a Roth IRA. And then you go figure out where else can you put your money to save, right? Because I've already done all my spending, right? And now I'm just like, I'm serious about saving now, because I'm maxed out at where I can be paid for my job. And I've traveled, and I have all these toys, like, games, a bunch of cameras. And that's my bane. My vice was buying cameras. I'm not going to buy cameras anymore. I got what I need already, So I felt like I'm done. I'm not even trying to keep up with anybody, really. I don't keep up with the Joneses. I mean, like, I still look like I'm poor. Why? I'm not poor, because I might keep my needs simple. And, my main thing was spending money on camera. Now I'm done with that. Now I'm trying to max out and save for my retirement. Should I have done it earlier? Yes. But now I feel like there's not much I need anymore. Now I can just save. Now I can just focus on planning for my retirement, and setting up my heir for the next generation. Setting up my generational wealth for the next generation. So, yeah. I feel like I'm doing an okay job. I'm not behind, and I'm not ahead either. But I'm just glad I got to live my life, and that I get to make videos like this and help other people. So I'm in a very comfortable situation in my life right now to be able to have the free time to come to Knots and make videos for you guys to learn through my mistakes, or just discussing other people's mistakes. And that's why I have all these different buckets of places where I put my money, where it's not all in one place. So yeah, there are pros and cons to everything, and make sure that an IUL or whole life or term life or whatever life insurance is best for you, and don't let other people talk you out of things that you know what's good for you. But the first thing to realize what's good for you is to do your research and do your homework. Okay? All right. All right, don't forget to like, share, and subscribe and all that stuff, and watch that video right there. I'm going to tell you how I saved $100,000 and how you can too. Okay? All right. So we're going to say goodbye now, retirees and future retirees. Rock, paper, peace. Let's hang out again. Wait, yeah, well, I'll just see you in the next video. Okay? Bye.